Okay, folks, looks like we are live. We are here. This is Andre English coming at you today with a quick little 10-minute tip for some Forex success in the market. And we started this series. We are now on episode 3. And the idea behind this is just to be able to help people, get some basic little understandings of what Forex is, how it can benefit them, and some of the skills that they can use. Now, what I should say real quick is that everything that I'm going to talk about today in this little bit of time is something that I learned through IM Mastery Academy. That is the academy where, excuse me, I made the good fortune to plug into about 18, 20 months ago, something like that. That has dramatically impacted my life because it taught me the skill of how to trade. I'm excited about that skill set, and it's something that I'm passionate about sharing with people because I know the value that is brought for me in my life, and I believe that value can have some form of reciprocity for you in your life. And so pretty fired up, as usual, to sort of get into today's topic. So today's topic is sort of risk versus reward. It's not sort of, it is risk versus reward. And one of the general conversations that's usually a stopping point for a lot of people when we start to talk about trading in the foreign exchange market is because so many people have so little, not only financial education, but in particular, they have so much or so little trading education. Their impersonation or their impression of trading, so to speak, is that they're going to lose everything. Everybody has a story. My uncle's cousin's neighbor lost everything in the market or something along those lines. And the fact of the matter is, it's actually very difficult to do that. If you're following guidelines that are simple, the guidelines that the academy teaches you, never risking more than 3% of your account on any one trade, it's very difficult to sort of go broke. But as Wanda Webb says, right, I'd rather go broke investing than go broke spending. And that's an absolute fact. So here's what's going to happen. I'm going to talk to you a little bit about risk versus reward. This is not necessarily account management. What I'm going to show you real quick is how that if you take trades that have a low risk but high reward, if you're using that as part of your trading plan, the types of trades that you want to get into and that you're looking to get into, then you will see that the benefit is that you can actually lose more than you win, but yet you can still win in the market. So what I'm going to do real quick is share my screen. And so as we talk about trading here, most people, we talk about a concept called pips, right? And what pips are just percentages in profit. So pips equal money, okay? And so what happens is the way the market moves, you see it move up and down like this. Looks like, an EKG machine, something like this is how the market is moving. And if you had an entry point of, say, right here, let's say, and you expected price to go up, every little increment of the market that it moves up is a percentage in profit or a pip, okay? And so what you're looking to do, obviously, if you're looking to be in a buy, is you want price to go in an upward direction. If you were here and you were looking for a sell, you want price to go in a downward direction, okay? If you were looking for price to go in this downward direction, but somehow the market reversed and it started going up in a buy, that's where you have what's called a stop loss, okay? So what happens here is that down here would be where your take profit is, where you're expecting price to move, and that's what you want to hit. That's your target. Your stop loss is mitigating your risk, okay? So this becomes your risk to reward ratio, your stop loss to your take profit. And it can be either way, whether your stop loss is above, that means you're in a sell. And if your stop loss was down here below and your take profit was above here, you would be in a buy, okay? And I know I'm running through this real quick because, like I said, this is just 10 minutes to give you kind of an overview of the type of education that you would be getting. So again, stop loss prevents you from losing any more money, never more than 3% of your account. Take profit is where you anticipate your trade to go to be able to take profit and put that money into your account. So as you can see that, then what we have here is that if you were to risk 10 pips on a trade. So what does that mean? The risk is your stop loss, okay? In order to gain 30 pips as your take profit, okay? That would mean that you had a 1 risk to 3 reward ratio. Do you see that? 10 goes into 30 3 times. So you have a 1 to 3 risk to reward ratio. This is a good type of ratio to have as a trader. The higher you can get this number versus this number, the better. So if you had a 1 to 5 ratio, that'd be great. A 1 to 7 ratio, that would be amazing. Okay? And so you're looking for a risk to reward. This is the reward side. Reward ratio of at least 1 to 3. Why do you want to do that? So let's do the math. Okay, what I love about Forex and what I love about what we're trying to teach you, and I know there's a lot of hype around our company right now, and there's a lot of hype about the building side of things because what we're doing is absolutely amazing and impacting people's lives. But when you really break it down, what makes Forex so great is that it's math, not hype. Okay, so watch this. Say on your risk, let's say that 10 pips that you risked in that last example was equivalent to $10. So every time you lost $10. And this is the risk, again, risk. And over here, every time you won 30 pips, which equaled $30. And that was your reward. Okay? So let's say that you lost six losses versus 4 wins, meaning you only went 40%. Okay? So watch this. Look at how this works. This is amazing. So if I won 4 times, right? $30, because that's what I won. 4 times 30 means that I won $120 in wins. If I lost 6 times, that means 6 times 10, I lost $60 in losses. Wins, which means my net profit would be $60 in profit. Do you see that? Because I'm now going to subtract the 60 that I lost from what I won, and I still have here. So I went 4 out of 10, or I was 40%. I was not even an effective trader. I lost more than I won, but because I understood the risk to reward ratio, that means that I still ended up a winner. This is an important lesson, folks, that I hope you guys are going to take to heart on this 10-minute tip. If you're using proper risk management, meaning that you're leveraging properly, and that within that leverage requirement, your risk to reward ratio is 1 to 3, 1 to 4, 1 to 5. You don't even have to be a great trader to be able to succeed in the market. All of this stuff that people have been telling you is because they don't know what they're talking about. Risk to reward, using a proper stop loss, having proper leverage is so important. So again, your risk is essentially, right, the percentage of your account that totals up to your stop loss, and that's going to be in pips, okay? And then your reward is your take profit. How many pips are you going to earn and take profit? So if I'm risking 10 pips, in order to gain 60 pips, that means I have a 1-to-6 risk to reward ratio. That is a great trade idea. Okay? That is a great trade idea. So understanding stuff like this and learning stuff like this is really going to set your trading on to another level. This is the type of clear training that you get in IM Mastery Academy. This is the type of trading that says, hey, listen, don't come in here and trade without a stop loss. Don't come in here and try to be too greedy. Use the stuff that we have. So as an example, as we're wrapping up, because I got, I think, 2 minutes left, what I want to show you here as an example would be something here that we have, which is called the harmonic scanner. So we have a scanner here that we call the harmonic scanner, and it offers usually around 200 plus or several hundred trade ideas that are highly profitable per week. And so what happens is you see here on this particular scanner that you had a targeted entry price, right? It gave you a target, excuse me, for an entry price right here. It gave you a stop loss right here. You see the difference between those is small, but then you see the potential reward up here is big. So if you end up right now, you should be around the time to enter this trade. If you entered this trade and you rode it all the way up, your potential profit is significant where your potential risk is mitigated. This is the type of trade ideas that come with our academy. This is the type of stuff that you would have access to. Look at all of these trades that just, all of them set up with great risk to reward ratios already factored in. And you end up taking these off of some additional analysis and some training that you get in the academy. But the point is that these things are set up for you, not just on the 15-minute. What about the 30-minute? What about the 1 hour? What about the 4 hour? We have trades on all these different time lines so that they can fit your trading style and who you are as a person. So folks, I'm telling you right now, if you begin to trade with proper risk to reward, I hope that makes sense to you. The amount of pips that you're risking versus the reward that you're going to be able to receive, okay? If you can trade with that proper risk to reward ratio, you can actually be an ineffective trader and still be profitable. Now imagine if you can learn that skill set and also get help from trade ideas from the harmonic scanner, trade ideas from some of the other fantastic products that we have. Gold Cup, DeLorean is off the chain, Steady, all these other things that offer trade ideas that are successful, and you apply your proper risk to reward, your proper 3% account leverage, and you actually begin to win more than you lose. What could that do for your family? Folks, and what I'm saying is most people are under the impression that you have to sit there and trade for 12 hours a day in order to make this happen. You can put one trade in a day if it has the proper risk to reward ratio, and you can win. And that could take you 15, 20 minutes of analysis. You set that trade up and you go on about your day. Folks, we don't encourage over trading. We encourage you to study. We encourage you to learn. We encourage you to participate. We encourage you to join in this wealth conversation. But we don't encourage you to overtrade, and we certainly don't encourage you to risk more of your account than is necessary, because it's not necessary in order to grow your account, and it's what is seemingly an inconceivable amount. Okay, so with that being said, I'm very excited to have shared this with you. That is going to be our lesson today on risk versus reward. I hope you got value. If you did, please like it, share it, send it around to people that you know that need to get some information about trading. And tonight, we're going to actually have a presentation going on tonight, Facebook Live here, 7 p.m. Central Standard Time, to really dive into what it is that our academy does. I appreciate your time. I'm Andre English. You guys have a great one.